Welcome to the After 5 p.m. podcast, where we check out of mortgages at 5 p.m. and check into family, life, and finances. Today we've got a special guest here, a guy near and dear to both Ben and I's hearts, Russ Brown.
Thanks for having me, you guys.
Russ, we're excited to have you on. I know we've been talking about this off and on for a number of weeks, so nice to be here with the mics on.
I'm glad we got connected. Yeah, it worked out.
Okay. So some of the connections, we want to give a little bit of background to who Russ is. He currently is the president and founder of Patriot Mortgage, but I want to give you a little bit of background on his story and in the business. He got into the business working for Chase Bank up in northern Utah in Ogden. Where he eventually made a jump down to moved down to St. George, continued to work for Chase, and then in 2006, correct me if I'm wrong on any of this.
Right, I'm out there. Yeah.
Ended up leaving Chase and joining Countrywide.
Countrywide, yeah.
Okay. How long were you at Countrywide?
2 years.
2 years. 2 years later, he left that banking platform and started doing some brokered loans with...
I wanted to try out brokering. Yeah, I'd been at two big name banks, Chase Bank. I wanted to stay at Chase when I moved here. They actually had plans to open some branches. That's part of why I moved down here, and the weather. But St. George was great, and I waited for like a year working from home, but they never ended up opening the branches. They announced that they were going to end up merging with another bank, which later became Washington Mutual, that they did merge with. Mm-hmm. But after working from home for a year, I just wanted to be in an office with people. So I found a great office. James McPherson, that later went on to work at Academy and do some great things, was my manager at Countrywide. So I had a great stint there with them for a couple of years. And then I just wanted to try brokering. So at the time, the biggest broker in the state of Utah, at least, was Envision Lending Group. And I went to work for them.
But before I keep going through kind of your resume and the different stops with mortgages, why the desire to broker? What was the appeal to want to try
I
that?
just had other friends in the industry. I had a brother that was working for a brokerage, and when you're new and you haven't kind of seen all the angles of the business, you just have curiosity about what's that like? But more than anything, I had heard there's lower interest rates. There's other things that they're doing that I just wanted to go see what that was like. And so Envision Lending was like a real like 500 or 700 a file kind of a shop. Like it left more on the bone, so to speak, for the broker if you kind of knew what you were doing. And there were other downsides I didn't realize at the time, but we were just about to hit the mortgage meltdown.
Sure.
So Envision swelled up to like 1,800 loan officers, and then they crashed. They had fraudulent files, they had problems. They shut their doors in the middle of the meltdown. So I want to keep going. Do you want to tell you what I did? So
how old are you? Family? Give us the snapshot of where you're at personally.
Let's see. So I started in the biggest business August 1st of 2003. I would have been 26, 27 at that time.
Okay.
So I'd gone to BYU. I went and got an accounting degree. Found out through that process I didn't want to actually be an accountant. But I like numbers, you know what I mean? I like finance, and it's like the mortgage business. Like no one goes to school to get into the mortgage business. Mm-hmm. You just fall into it somehow.
Oh yeah.
But once you're there, you never leave. It seems like. So it was just this great alchemy in the end of this finance experience. But I like people, and I like, just relationships and stuff. So there's selling, how to learn how to sell, how to have big dreams, how to do things. So that those two mixed together ended up being a great fit.
Going back up to when you just initially started working with Chase, married at the time with kids?
Yeah. Yep. Laura and I were married. We just had one boy, our first. And my whole career was just right there at the very beginning. We were just renting a little apartment, and I went to work there, bought my first house back when there were no doc, Nina, every one of those kind of loans. Like literally when I qualified to buy my house, I'm the only one with the job. And it was better to qualify my wife, who didn't even work, because her credit score was 1 point higher than mine. I had a 739 credit. Hers was 740. But on a no income, no asset, no employment job, the ninja loan, or whatever, there was some crazy stuff back then. But she did the loan in her name only. It was just, I was so confused, honestly. Getting in the industry, I was like, so this is how business is done? Like,
seems backwards.
It was really weird. Yeah. Yeah, obviously that didn't work out so good long term for the industry.
So Chase, big chain bank, right? One of the bigger players.
Mm-hmm.
It is often when you're working for a bank, they pay you a salary and then a much smaller commission. Was that the case with Chase?
No, I was commission only.
Yeah.
They gave me a little draw for like 3 months when I started, just to kind of like see if I could survive. But it was a hit for me right off the bat. I started in August, and in December I closed 29 loans. Wow. And it was my first taste of like, I just went crazy. Like, I just loved it right off the bat. And just the ability, I mean, I think my comp program was like 55 bips. Like, it definitely wasn't like you could do better, but I didn't know that. Do you know what I mean? Back then? But not to complain, Chase was good to me. It was actually a really great place to start in the business because there were some real top performer hitters there that I learned the business from that I still really respect, and I'm good friends with some of those folks. And so they were top shelf, and I got a vision of what it was to like be a real professional in the industry. And would have been an easy time to have started somewhere else. Back, like I said, back then there was a lot of low documentation loans and stuff, and a lot of just weird stuff people were doing, making up W-2s and kind of crappy. It needed to be cleaned up. Do you know what I mean? But I kind of got born into an environment that was just a lot more professional. So I think I really benefited from that.
Okay. I appreciate that insight. Going back to kind of the roadmap here. So Chase moved down to St. George, Countrywide, leaving Countrywide to experience the broker. You were there for 2 years and then went to Superior Lending.
Yeah, so Envision, when they shut their doors, I went to Superior Lending. It was a similar model. And just some friends I'd made in the industry, some really great guys. I'm still friends with them too, Matt Walker, Jason Karp. And there was a third guy named Miles Pitcher that was their other partner. And I really enjoyed working with those guys. My last year there, I was like their top guy. We did this. We did a trip to Costa Rica, Ben, where you just were at recently. Anyway, I really enjoyed working there. They just kind of sadly, like, that model was just so thin. I think they'd have to say, but my reading of it was that it just wasn't that profitable for them. They're like, geez, I could just close loans on my own and make more money than this. And here I'm wrangling around all of these people and herding cats and stuff. And so after 2 years at Superior, they decided they were going to go like shut that down. They were selling off to their third partner, Miles. And I think, as far as I know, Miles still running with it to this day. But those guys left and went to W.J. Bradley. And I kind of was faced with this, like, what do I do? But I didn't really want to go. I wasn't feeling it going to W.J. Bradley. So that's when I decided to open Patriot. So about April of 2011, I got my PLM in Utah and opened Patriot.
Open Patriot. So which started out as broker.
We were just a brokerage. My vision at the time was like there were like 5 of us. I had 2 processors and an assistant and me and a marketer, and I just wanted a good place to do my loans. I was 8 years in the business. I was a good loan officer. I just wanted to go experience that, and I did. It was awesome. I went everywhere to try and raise some money to get this thing launched, and I called all my rich uncles. I called my cousins. No one would lend me any money. Apparently I wasn't a good credit risk in anybody's eyes at the time. So I like cashed out my 401k, and I spent like $100,000 to kind of get things started the way I wanted to. But it was awesome. 2011 was a fantastic year in the mortgage business. It was the year, the meltdown had been in place a while. People were like seeing me in the grocery store aisle, like, hey, do you need a hug? Like, oh, you're in the mortgage business. It's awful. And I was actually just crushing it. I was really having a fun time. Like, I broke even back on my investment by October of that year. And like, then we just went on a spree. Like 2 years later.
So go back on that. When you opened the doors, you didn't do it on your own. How many employees, how many other LOs were working with you when the doors opened?
Just 2 processors, a marketer, and me initially. And I had pulled 3 brothers into the business, but they didn't initially come with me. They were at Superior, and they stayed there for a little while. It didn't take very long. I just think like what I was doing was really fun. It just still felt like a disaster economically for people. You know, we had just gone through mass foreclosures everywhere, a really downtrodden time. And then all of a sudden here I was like in Little St. George doing something that was really successful and fun. And so it drew a lot of people in. I mean, Shaun, you were one of those people back at that time. And it was kind of, we went from 4 or 5 employees on day one. 2 years later, we had 150 employees. And it was, you know, the winds were blowing, and we let the sell out, and we had a good time with it. And there was some great life stories with it. Some people that just needed a good opportunity, and they got one, and they came in, and, you know, they were making $8 an hour trying to feed 3 kids. And then the next year with me, they made $150,000, and it was awesome. It was awesome. There was a lot of that, and it was, I still haven't really quite been able to match like the golden era of Patriot's early years. Like it was such, you can't create the circumstances probably quite the same maybe anymore, but that was really fun. Unfortunately, not super sustainable. Like it was also a rate falling time, and we did a whole bunch of refis, but refinances are really volatile. So by middle of 2013, we had rates pushed up really sharply, and we had our first like reality check. Yeah. I had always been kind of a purchase guy and relationships, and that's all I knew. And for a little bit there with Patriot, we just did a bunch of refis, and I kind of just let it go. And we experienced that. But when rates go up, you got to have something more, you know?
Yeah. And, how cool to see it grow that fast though. 'Cause that's the type of environment, the way you're describing it to me, is it's fun. It's fun to go to work. There's an energy, there's a buzz. You kind of feed off of each other's energy. I'm assuming with that many employees and that much success happening, it was a fun environment.
Oh, dude, it was so fun. It was a blast. It was just like bounteous. Like there was so much opportunity and like loans just laying in the street to be picked up and people to help and you know, people that bemoan selling like, oh, who's this slick Rick guy trying to get me to do something? But it wasn't like that. We were just helping people get what they wanted. They just needed someone to help them. Do you know what I mean? And we were there, and we were good at it, and we built it, and we succeeded at it. It was good inside the company. It was good outside the company. But I remember we just kept taking down cubicle after cubicle till we were just sitting on top of each other. And then we filled up the bomb shelter in the basement with as many, I'm sure we broke every fire code probably, but we were just having a blast. You know what I mean? We went and bought a 13,000 square foot building. And I remember reaching the point that I was looking for more office space beyond that building, and just for a minute. And then that's when we had our first kind of big turnaround.
Yeah. So rates start coming down. I'm assuming loan officers can't, because they're focused on refinances, end up leaving, chasing other ventures.
So rates were going up. Yeah.
What did I say?
Yeah.
That's what I meant.
That's what you meant.
So rates going up, things contract a little bit, and then you make a major shift from more of a banking model.
Yeah, it's kind of inspired from that time. The top people that I lost, the thing with Patriot was we had picked up a bunch of people that knew how to do some pretty simple refinances, like a VA IRRL or an FHA streamline, like no income, no asset, no appraisal, not very hard to do. And compared to a purchase that has a lot of nuances to it and understanding contracts and
deadlines,
really taking care of people, high touch experience, just not everyone made the turn. You know, that was a tough experience for me. Was trying to take people through that experience, and kind of some survived and some didn't. Some people just went into totally other industries. The top people that I lost that were good at the business went to bankers. They went to a place they wanted more control. They went to places where they could have an underwriter that worked in the office. I remember one of the guys at the left telling me hey, when the day you get an underwriter, just give me a call. You know, I love you, but I got to just go where I can, really control this experience.
So I want to clarify just for listeners who may not understand what we're discussing here. When he says he's going to a bank, it doesn't mean necessarily your brick and mortar.
Yeah, not like a depository bank. In the industry, it's good to point out. in the industry we would call it an independent mortgage bank. But
explain
it
that
means that so as a broker, you're doing the functions of originating a loan, you're finding a loan to do, and you're processing a loan. But you're relying on someone else to underwrite the loan and someone else to fund that loan, draw the docs and fund it. And so if you're a full mortgage bank, full correspondent or fully delegated, means now you do all of those functions in-house. So you find loans, process them, you underwrite them, you're responsible to draw the documents correctly, you have a warehouse line or an ability to fund those loans, and when you have a nice, pretty box all wrapped up, ready to go, then you sell that loan off to some other bank, a Wells Fargo or a Chase, literally, any of those. And there's tons of other banks people have never heard of, but that buy lots of loans, service lots of loans. And so as a broker, we just did those. We just kind of found and processed loans, but we relied on someone else to underwrite.
So when some of your top dogs left for more of that banking model where they can in-house underwriting, you're saying that was the beginning of kind of that shift.
The reputation was especially strong back then that like if you're a loan officer trying to get your loans from realtors or a builder in town or something, they really value that. Like, hey, you're going to be able to deliver like the timelines that I need. Like, I went and found this, and I'm giving you this referral. Are you going to be able to function and inform us all the way along? And just a very great experience. And so brokers are better now. Like, I don't mean to. Like, it's the industry has shifted. Do you know what I mean? There's a lot of improvement in technology and stuff, but reflecting back on that time, it was tougher to broker a loan with great control than it is today. It's still a thing if you have direct control over that or not. Do you know what I mean? But that's just one of the pieces.
So if you were giving advice to a loan officer that might be a broker now and thinking about moving to that banker model, or someone that's in the banker model moving to a broker model, what advice would you give those two different scenarios?
So if you're a broker wanting to move to banker, you just have to be a person whose mindset really values that high control. You guys are both bankers. Do you know what I mean? You both have strong purchase business portfolios. The types of relationships and stuff you have just rely on complete ability to keep your promises. Do you know what I mean? Traditionally, that's been a little bit higher there. I was probably the biggest fan of being a broker at the time I was brokering, and I was, I think, at one point probably the biggest broker for sure in Utah. We were the number one broker for Stearns Lending when they were always kind of 1, 2, or 3 Stearns Wholesale in the country, and I was a couple of those years I was their top broker. We were pretty big for being a brokerage. Do you know what I mean? I remember a day, I'll get back to answering your question directly, but I remember a day just needing my docs to go out. Like, I'm the owner of the company. I'm your top, lender, brokerage. And I tried to pull every string I could pull to get those docs to go out, and they didn't go out. And it just burned me. It just burned my relationship. And that was the day I was like, I need to own this process at some point. I can't be beholden to this and not be able to arrange things how I want to arrange. Like, yeah, you need X, Y, or Z done. I'll get it done, but I need those docs to go out today. And I specifically remember that afternoon just being like, I have to control this process at some point.
Crossroads moment.
Yeah. So if you're a broker thinking about moving to banker, I would just look at how your business is built. And if high service is totally the priority, I think there's still some truth to this. I think there's still some pickup to be done by working at a bank, at a mortgage bank, with those controls. I'll add to that though that it matters a lot who those people are. Like, which underwriter do you have, and which closer do you have, and are they going to still be the one that stays after 5 and gets your docs done? Because if they don't, you're just as hosed as you were back when you didn't control it the other way. Sure. You know what I mean? You usually will give up some either in compensation or in rate and I'll just say rate and cost together of what you can provide on the banking side. It's a little bit more expensive. If you have all those people in-house, those have got to be paid for somehow. Do you know what I mean? So conditions being very ideal, or if you're very, in my mind at least, and anyone could argue this, but if you're a little bit lower volume or something, brokerage is a pretty good place to be because you'll probably make more per loan, and you probably aren't going to get into such a pinch. You've got more time to swarm your loans yourself, so you can get ahead of the curve, not need a pinch late on a Friday afternoon. Do you know what I mean, or something? If you're a other way around, you're a banker thinking of going broker. Maybe you want to make a little bit more per loan. There's a little more meat on the bone for those guys. It's much like wholesale in any other term out there in the economy. Do you know what I mean? They have bigger shops with a whole hordes of underwriters together and closers and things, so you can get a little cheaper on the pricing. You may want to pass that along to your borrower. Maybe you're just making a little bit more income. Depends on how you kind of set up your contracts and stuff. But and then there's a whole world of like, well, which wholesaler you're going to work with. You know what I mean? And the world's definitely, that landscape looks a lot different today, I feel like, than it did back when I was doing it.
Yeah. I think I hear a lot of people, because I do come from the banking background, and I am a control freak by nature. I want to control as many variables as I can, so I know I'm biased on that part. I feel like there's a lot of guys that go, I could never be a broker because of that control. But if I'm hearing you right, there's a lot more control nowadays in broking than there used to be. So maybe that shouldn't be as big of a barrier.
Yeah. Am I allowed to mention company names on this podcast?
Sure.
I mean, like UWM has become by far the largest wholesaler in the country. They weren't when I was brokering loans. They were like, I don't know, in the top 10 or something. But they won the technology game like big. They did very well. Them and Quicken, Rocket now. And there's some others that are really good. The guys, I have two brothers that broker loans right now, and a lot of friends that do. Do you know what I mean? But UWM is probably the top pick for a lot of them, just because they've overcome some of these control problems with just incredible technology solutions. So that's changed a bunch, and I feel like you can keep quality better as a broker today than you could back when I was doing it.
Yeah. Okay. I love it. From the making that shift, bringing us to the next major shift in your career, from running Patriot as a broker to then getting into that banker shift that took place. Walk us through that process. How difficult is it for a broker to become a banker?
So to me, I had no older brother ahead of me doing this. Do you know what I mean? Or like even anybody that I even knew. There just weren't people doing. I mean, it happens. It happens out there in the big wide world, and I would try and pick up what I could, but it was just a super blind process. I remember calling Chase Bank and asking, I got a hold of the correspondent lending division phone number, and I called them, and they're like, yeah, if you've been already being correspondent for 2 years, then you can apply with us. And I'm like, well, shoot, how the heck am I ever going to do that? Like, it was a big maze, a big puzzle ahead of me. I found that, I remember I went to this like broker to banker class down in Texas. I went down there and met a bunch of people that were trying to figure this out, and an attorney put on this class, and I picked up a few things there, like, okay, but it was through relationships in the end. Like, I found a smaller warehouse lender and a wholesaler who, like, I used to do a lot of loans with UWM, and they had Gold Dome was their warehouse lender, and you can kind of straddle this space between the two by you're now doing the funding and doc drawing process, but you're not underwriting the loan. Like, I don't think to this day UWM lets you underwrite your own loans. I think they'll let you draw your docs and stuff, but I kind of learned a bunch doing not what I would call that middle ground, like non-delegated or mini correspondent, they'll call it, and we just did both. We kind of did a bunch of broker loans. We did a bunch of those until I started to get more and more comfortable with that. The advantage of it was I now controlled the doc drawing process, or any adjustment that needed to be made, or the timing of it, or like I just wanted to call. I mean, Jeannie has been with me for like pretty much my whole time in St. George. She's my doc drawer to this day, and she's amazing. And if I call her and she could do it, you know what I mean? It was done. And so we straddled it for a while, and then just like picked it apart one little piece at a time. And you get one investor who teaches you some things, and they help guide you a little bit, and you get all your docs double checked by Blackman and Graham down in Texas, paying an extra fee for that, taking an extra 2 days to double check everything or whatever. And then you're just trying to learn how to wear the big boy pants. I mean, literally, when you go full correspondent, like, you're on the hook. It's
so when you started the process, though, to when you were actually full correspondent, how much time? How long did that take in that process?
I mean, literally, it would have started when I opened Patriot. Do you know what I mean? Learning just how to broker a loan. I didn't know how to own my own company until that day. Well, not in a mortgage sense. I'd owned some other businesses, but so like probably 2 years kind of strictly brokering, then probably like 2 more years, kind of 2 to 3 more years where we were kind of doing both brokering and non-del. And then by 2017, I partnered with Chet Wall, and together we had enough resources, because you gotta meet certain net worth requirements. You gotta like kind of show that you know what you're doing. Your resumes have to be sufficient. You've got to have an underwriter on staff that's a DE underwriter. You know, they have the certifications needed and stuff. So together, he and I had what we needed to underwrite our first loan. It was like a big deal the day I underwrote like one loan, and then by the end of that year, we were underwriting like 85-90% of all of our loans in house.
So if there's a broker out there who owns his own broker shop who wants to make that shift, what advice would you give?
Get a bunch of capital and get a bunch of people who know how to do that. Like, it's just you could either bootstrap it the way I did. You're just gonna pull it together one little line at a time, and you're gonna just modulate your way along until you're like, okay, we asked a bunch of questions on that. We think we know how to do this right. We have somebody triple check it, and then you dare fund a loan. You know what I mean? But you have to get a warehouse lender who will approve you to fund fully delegated loans, and you have to get an investor who will buy that loan. So there were whole huge packets of information you got to sign through. You feel like you're just putting your whole life on the line.
But here's what it's sounding like to me, and clarify with me. If someone who needs a credit card, right? They want to build credit. So they apply for a credit card, but the credit card company comes back and says, well, you're declined because you don't have any credit. It sounds like that's very similar to the experience that...
I remember that, feeling that way very much about this process. Like, well, you can't do it because you're not already it. And I'm like, okay. I went on to find more people that there were other banks and relationship warehouse lenders and stuff that were more entry level. Do you know what I mean? It just took me a while to find them.
Okay.
And
kind of, there's a will, there's a
like
way.
If you were trying to do it, I would, if you don't already know all of this kind of stuff, then I would just try and find a consultant or somebody. I would try and find me. Do you know what I mean? Like, find somebody who's already done it and have them help walk you through it. Because and it takes a bunch of capital. Like you hopefully you've been successful, or you've got a rich uncle or something. But I've watched some other ones just launch as full correspondents right from day one, like enviously, just like, I'm like, oh, what a great, if you can just put together $5 million and you can just hire the people you need to hire and just launch as a full core, that would be, oh man, I would have just deliciously looked at, like, that'd be so wonderful. We just didn't have that ability. Do you know what I mean? So we did it.
But that's one of the things American way. That's one of the things I admire about you, Russ, is the road less traveled by, right? You took the hard route, and I think I'm inspired by that. I'm inspired by you didn't have anyone there to coach you or teach you, but you knew what you wanted to do, and you just kept taking one bite at a time.
Yeah, I was really curious. I knew what being a loan officer was, and I knew some of those things, but there's whole other sides of this industry that I was curious about and I've wanted to know. So that was partly what drew me through it, and kind of a belief that there's like more available on the other side of that, and like wanting to go find out for sure what's over there. And there's some really wise people who just chose not to ever do that. Do you know what I mean? Like, one of my greatest mentors in the business has just stayed being a loan officer the whole time, and she just crushes it. And she's one of the best in the country. She always has been. And I look up to her so much, but she hasn't gone down this road. Do you know what I mean? And she hasn't, there's more stuff. Once you build a mortgage company, there's this whole almost stock brokerage side of it where you're dealing in secondary. When you go to sell those loans, those whole marketplaces with broker dealers on Wall Street and relationships, how you go sell those loans and stuff. usually for most loan officers remains a mystery their whole career. And you could be in this business for 30 or 40 years and just not understand that part. It's always you locked a loan somewhere and it got taken care of somehow, but you just don't, that wasn't your responsibility. Other guys had to figure out how to do all of that stuff.
Yeah, is it funded, recorded, on to the next?
Right. Yeah, your loan got recorded. The fat lady has sung.
Yes.
You know what I mean?
Yes.
Like you're done.
You're not worried about trailing docs.
No, that's someone else's problem. So it is a bit of a glutton for punishment road. Like you postpone a lot of, at least in my journey, you postpone a lot of, like, I don't know, winnings or earnings. Like, had I just stayed a loan officer and just grew my constituency, do you know what I mean? Just like, in a lot of ways that would have been a real peaceful probably road for me, because I was already good at that. I mean, it self-admittedly maybe sounds bad, but I was good at that, and I could have just, it would be interesting to have gone down that road too. Do you know what I mean? Like, just bought rental properties like what you were doing, Ben, you know, and just kind of laid up in store. But like, I was always taking a risk on opening the next door and opening the next door.
But that makes you so much more well-rounded. You understand bookend to bookend the mortgage process intimately, every step of it. And that, I just think that's neat.
My wife tells me I have like a 2-year itch. Like, I have to, about every 2 years, I have to find something new or I'm not happy. And so maybe that's a little bit part of my personality, but it does seem like all my life I've kind of just had some new challenge coming up that I just kind of dive into again, and then it makes it really fun and interesting.
So take us through, for a lot of loan officers that don't know what happens after the loan's funded and recorded. Like, what does that look like as an owner, and walk?
Yeah, so once the loan's funded and recorded, it's now sitting on your warehouse line, and you have a loan held for sale on your balance sheet.
Because you're writing the check.
Well, yeah, no mortgage company has that much money. Like, if you fund $20 million worth of loans in a month, you don't actually have $20 million sitting in your bank account. So there are these big lines of credit out there called a warehouse line, and you go get one of those, and they have $20 million. So they lend it to you for a short period of time while you're holding that loan. You've funded it, and you know, if you're good, you just have it on there for a few days. If you got problems, or I don't know, like you were still adding a pay stub to the file or something, you might be sitting on that. You know, at 30 days, you start getting into kind of like, they're kind of like, hey, what's this thing still doing on here? Get this thing gone. But the next step is to sell it to an investor. So you got a whole slew of people, companies, banks that want to service those loans or want to intermittently service them for a little while. And so what you're just preparing to do is meet all of their requirements to get that loan sold off to them. So you'll have a post-closing person whose responsibility is to fulfill all those conditions and get that loan ready to be sold off to probably who's just going to be servicing the loan. You know, like, it recorded Patriot Home Mortgage, and now it's going to be serviced by Penny Mac, and we're getting it ready to send off to Penny Mac, and then that's who the borrower will be making all their payments to. If we hung on to it long enough, they might make one payment to us or something.
Yeah. So it's like a consumer that when they get a loan, and then hey, your payment now goes to so-and-so after, this is the reason why.
Right. So you have to be a pretty big, the bigger mortgage companies, sometimes they'll service their own, but even the really big ones sell their servicing all the time. So they'll maybe have the loan for a little while, and borrowers out there in the world are you know, they've all experienced this. We're like, I used to make my payment to Mr. Cooper, and now all of a sudden I make my payment to Chase. This letter came in the mail. You know, these mortgages are all batched up and become part of mortgage-backed securities in the whole capital market side of this, you know, which is a whole other discussion we could sit and have, which is super cool and really interesting, you know, but they do get batched together and they get sold off in big portfolios and things. And so sometimes that servicing, you know, that carries a premium. It carries a way that mortgage servicers make money. Fannie Mae and Freddie Mac and Ginnie Mae, that are the ultimate securitizers of these mortgages, you know, they pay to have some mortgage company somewhere servicing that loan. And so because of that value, sometimes loans, maybe a company just wants some cash, so they'll sell off a big chunk of their servicing portfolio, and they need some cash for it now or whatever. Later they're building more loans back with it, and there's a whole other business of that.
But going back to your comment, Shaun, there's multiple milestones after the loan is funded, where loan officers are usually like, closed and funded, I'm done. But you have the getting it sold, meeting the conditions of the servicer.
Yeah.
You've got letters that need to be sent out saying notices to the borrower.
Yeah.
And you also have trailing docs, which is an element of title policies that usually come later as well.
Yeah, it depends on what type of loan it is. Like an FHA loan has a lot more to do with the whole trailing doc piece, than some other loans and stuff. But yeah, there's this polishing that happens there in the background that a frontline loan officer just doesn't really have to be too concerned about. I mean, if you're very compassionate, you're asking Becky, what do you need to make that, what could I have done to make that better for you? But, there's some amazing people that know how to put those together and get those sold.
But there's just a lot of moving parts even after.
Yeah.
So.
Yeah, and you mentioned earlier too, when you made the jump to correspondent, you're on the hook a lot more. So what is the big difference?
Yeah. So, I mean, some of the big risks are there's a defect in the loan, and the lender's coming back, the investor's coming back to you and saying, hey, they're trying to go securitize this with Fannie Mae. Ultimately the guidelines get written. Most of the loans done in the U.S. are done to meet Fannie Mae, Freddie Mac, or Ginnie Mae's guidelines. There's a whole segment of portfolio loans, but the vast majority are those three. And they publish written guidelines, and you got to meet X, Y, and Z. And that's why the 5th page of the bank statement has to be in there. And all the other annoying stuff that we constantly annoy our borrowers with to try and get everything to meet the requirements that Fannie and Freddie and Ginnie wrote. So, one, if you mess any of that up in the underwriting process, you're going to have a problem. And two, if you mess any of it up in the compliance process, you're going to have a problem. So we're a very highly regulated industry. Really highly. So, and so, you can't do certain things like, you can't just close that loan in 5 days. You've got to wait certain wait periods, and I know you guys know this, your loan estimate has to go out and it has to be out a certain number of days. And then your closing disclosure has to go out and it has to be out a certain number of days. And so, if you accidentally put an LE and a CD out on the same day, your loan's toast. I did that once and it was toast. I had to refinance that loan. Like no one would buy it because it was an unsellable loan. No one could get Fannie or Freddie to securitize that loan. So the lender comes trundling back over to me like, hey, you guys messed this up. And we look at it and we're like, dang it all. We did mess that up. So you start using all the remedies at hand to fix it. Maybe you can refinance it. Worst case scenario, there's a marketplace out there with scratch and dent lenders, we call them, who'll buy that loan from you for 75 cents on the dollar. And that's going to be expensive if that was an $700,000 loan.
Versus you taking the expense on, right? Is that why you resell it?
You definitely got to get it off your books. Like your warehouse lender is not going to let you just service that loan forever. Do you know what I mean? Mm-hmm. Like it's on your warehouse line, right? You funded it and it's sitting there and they're like, oh, well, I'll be patient with you for 30 days. After 30 days, they start wanting you to make like curtailment payments. You got to start, give me 30 grand, give me whatever. And so their risk is getting lower because they're kind of like, you probably got some kind of problem loan on your hands. So you got to start making payments to your warehouse lender. And then you're just finding ways to get that loan off your books. It's terrifying. Like you don't want to be in that spot. So you work really, really hard to never be in this spot. But when you are, then you ideally you can just refinance that loan and in the refinance, get it all straightened out and fix whatever your problem was. Or worst case, you're going to sell it to a servicer they're not trying to send it to Fannie Mae or Freddie Mac. A scratch and dent lender has capital enough put together. They'll service the loan and they'll take your little imperfect loan and service it, but you're going to pay for it.
The ability to refinance isn't always an option if rates are trending up. So some of those tools might not be at your disposal in trying to get one of those.
You're right.
Remedied.
No, it's been one of the scariest for mortgage company owners. Moving from a really low rate environment to a really high rate environment has been one of the worst. Maybe a lot of people in the industry don't even realize that, but for company owners, it's been awful because there have been loans closed at 2.875 that have a defect, and someone's coming back to you 6 months later, 8 months later, a year later, more, and saying, hey, you got to fix this now. But now rates are 7%. Like, that's like $150,000 remedy.
Yeah.
It is ridiculously more, like, to buy a rate down to 3% now, it's like the premium's ridiculous. You know what I mean? So, yeah, we're kind of through. I mean, it's been long enough now that a lot of the loans, I mean, if there's a defect in your loan, it's probably been figured out by now. But I went through this. I went through some tough battles back and forth on, like, no, we did do that right, and this and that and the other. And I was staring down some possible losses like that. But that's part of being a business owner, and some of the walls you walk through to just, dude, you just get really solution oriented and you figure stuff out, and hopefully have really smart people on your team.
So it sounds like you can kind of defend yourself a little bit too. It's like, hey, if there was a defect and it was found, I mean, it's
not unlike underwriting a loan when you're like seeing it differently than your underwriter, and you're like, no, I think it does meet the guideline because of this, and this, and you need to be good. You need to get your attorney mindset on and figure that stuff out. And so, yeah, you work on it. You work on it, and occasionally you're wrong though. If you're gonna ever make this move, like, you're gonna lose sometimes. So you better be profitable enough on loans that you did all right on, that you have a loan loss reserve basically.
Yeah, I was gonna say to stock up the war chest, right?
Yeah, yeah.
Make sure there's money
one
in
of
the coffers.
many things that, like, you just don't know about, and it's just easy to underestimate thinking about going into something like that you know, when rates are low, like, you can't even imagine that this would become a problem. Do you know what I mean? And, like, who knows what is coming up next that's just going to be a problem. All I know is, like, I've walked through, like, a lot of brick walls and I'm still alive. Do you know what I mean? Like, I don't know. It's very kind of a faith promoting thing to look back and just be like, oh, I thought I was dead. Like, I thought it was over.
I thought it was
That's it, you know.
How many times can I be dead?
It's happened a bunch of times. Yeah. I'm like, I'm going home to my wife and I'm like, honey, this and this happened, and what are we going to do? You know, and I'm having concerns, but, like, it's just like the rest of life, the obstacles you face, but you go to work the next day and you get to work on those problems and you solve them.
Something that I've always admired about you, Russ, is work is important. You want to grow a company. You want to do something special with it, but but your family is equally as important. I'm curious about going through your career. How have you kept a work-life balance and made family a priority?
So it was a real challenge for me early in my career because like I told you, I initially just was a success at this business. And so it was like a drug. Like, it was just awesome. And I was super susceptible to, like, what tons of all of us that get into a profession are susceptible to, where it's just like, the work is so fulfilling, you just want to be back there doing it again. And so, you know, here I'm raising a family. We had 5 kids, and I'm also super excited at work. And so, you know, if you ask my wife, she'd be like, yeah, Russ worked a little too much probably those early years. A few years into my career, though, I read a book called How Will You Measure Your Life by Clay Christensen. And obviously I had heard the concept, you know, of just like, you got to be there with your kids when they're young, and had heard lots of the anecdotes and advice that we get all handed. But I will say, when I read that book, like, I pivoted. He explains really well in there, just like your life won't turn out to be what if you just don't control it, it just won't turn out to be what you intended it to be. And a lot of people don't even think about what they intend it to be. And, you know, Clay was a Harvard graduate, and he talks about going back to his 10-year and his 20-year reunion and finding people with, you know, divorces and estranged children relationships, and people even in jail, and you know, like, the guy that was at the culprit, like, of Enron was, like, in his graduating class and stuff. And, like, things just weren't at all like, he was like, if you met these guys when we were graduating, this was not what they had planned, you know. And we sometimes all fool ourselves, like, we say this is our strategy. Like, no, I'm a dad. Like, I take care of my kids and I go home. But you look at the clock and it's 8 o'clock and you're still there working, and you're like, does your reality actually back up what you say your plan is? he has some stuff in there that he just goes or explains it super well, but it just hit me hard. And I just go home now. So when it's time to go home, I go home.
Is it easier as an owner to go home? Or is it harder?
No.
Yeah.
No. I still just have a ton of responsibilities and things to do. But I don't mean to sound cold. And it's not that I don't care about service and stuff. And clearly I probably arrange other things to make sure I keep service levels high and stuff. But a lot of it is still just opportunistic, that you're still hanging on there late, getting something done or whatever. And I just don't, rarely anymore. For a lot of years, I'm just super glad I made that decision eventually.
How do you turn it off? Like what? You just, yeah, I'm done.
Dude, for me, it was kind of like that. I just had to be like, there will always be something. Like this
Right.
computer will just freaking suck the life right out of me.
100%,
So
yeah.
like for a long time, 6 o'clock would roll around and I'd just be like, stand up and walk out. Like, you got to be done now. And go pay attention for your kids for a little while. If you're diehard, then get back on at 9 o'clock and finish up some emails or whatever. I'm a more morning person, so I'll get up and do stuff in the morning that other people are sleeping through or whatever. I don't function super well later at night. It's better for me to just go to bed. But I just made it a priority, dude. I read that book and I changed. That was it. I don't know.
Interesting that the book was the pivotal point. I'm curious, if we were to be interviewing your wife and kids, what would they say about their dad running a company but still being intimately involved in their life?
Great question, dude. You should ask them. I'd be really curious to see what they say. My wife would remember it the best. I think kids are a little bit oblivious, especially when they're really young. But I hope she would say like, yeah, that guy. I think she would say early on that was like, I remember that being really tough. I remember I would try and it was really advantageous to call borrowers between like 5 and 8 p.m. You can get a hold of people. During the day, they're just not as accessible. So I would try and like stay home in the morning and then work later into the evening. I'd call people till I felt like I was annoying them by calling too late, usually about like 8:30. I'd try not to call after 9 o'clock. And then I would put all my loan files together after I was done calling. Like 5 to 8 was like sacred call time for me. And I would just, that's how I was early. One of my, I don't know, things that helped me be successful. And then my files were always sitting on my processor desk the next morning ready to be done. But my wife eventually was like, it's not the same, Russ. Like you being here in the morning from 8 until 11 is different from 6 to 9. Like she called it witching hour. Like it's just a different struggle between 6 and 9 at night when you've got little kids. So I just had to
Shaun,
Witching hour.
witching hour.
Oh man.
Yeah.
Shaun, you're laughing because you're in the middle of dealing with those young kids, right?
Yeah. Well, no, it's just fascinating to me. So when you started talking, about family, like devotion comes to mind about you. Like you're devoted to family, you're devoted to work. Like you're a man of devotion. And for me, it's always hard to like turn off because I wouldn't say I'm like a devoted person, but I'm like committed.
Yeah.
Right.
Yeah.
And in this business, it's like nonstop. There's someone you can call. There's another file you can look at.
Yeah.
There's a realtor you can call. Like it really is never ending. And so it's just interesting to hear you say like, oh, I turn off.
Yeah.
But I think it ties into you control your intent.
Yeah. I think you have to just get conscious about yourself and kind of confront yourself a little bit. And part of it is money. Part of it is just the work itself. Like there's a certain thrill out of just the success of what you're doing, and it just feels good. And then the other part's like, hey, how much am I laying up in store for my retirement years, or the things you're trying to buy next, or I want to buy a house and a car and blah blah blah. And then there's the now. There's the kids that another day is passing for them. And I feel like you have to strike your balance between those two. And it really is like, it's interesting for me to see where people draw their line. It's so fascinating because there's no rule book for this. And like some people they'll work a lot more. Other people will work a lot less. You can't push off though, just raising your kids till later. Like they'll be older. And, or those days are just gone. So like these vacations would come up and I'd be like, dude, it's like the worst time to go to Disneyland right now. But when it's scheduled, we go. Do you know what I mean? Like, and I try and be present while I'm there. Do you know what I mean? It's hard.
It has to be a developed skill set, because my mind, when I have an unresolved problem, I can be somewhere else, but there's something just processing in the back of my mind, worrying about it. But I will say, the longer I've been in the line of work, I have learned to compartmentalize things a little bit better. There has to be some skill set that was developed there to be able to turn it off, because look at all the things that are in your pocket. You got your email that is connected to your phone with notifications, text messages, and a lot of our both employees and clients don't believe there's a whole lot of barriers. They will reach out at any time.
There's definitely some things you can do. You can build a team. Do you know what I mean? You can have a partner in the business. If you've got a great team, it's going to allow you, they're going to function for you while you're gone. You get technology on your side that's helping you get things done so that you're needed a little bit less on all of those moments. And I think it's especially tough early in your career when you're trying to cut your teeth and you don't have those relationships and you don't have the capital and you don't have those team members built and stuff. It's tough. It's also like, it seems like when they need you the most, you know, but I'll be a little vulnerable though and just share a story that's like where this has hit home the strongest in my whole life was, so my oldest son, Tyler, passed away when he was 16 and that's not what I ever expected in my life. But the October before he died, I took him to Hawaii. And the two of us spent a week in Hawaii together. And I wouldn't trade that for the world. I would not trade that for any amount of money or any degree of success. I didn't have any idea that what was coming ahead of us. Do you know what I mean? But I'm just so glad that I took some times to choose to go be with family and have those memories, like such good memories. Like we had the best time. We went to Waimea Bay and we just played in the waves till we were just destroyed. You know what I mean? We went to Ted's Bakery and ate good food, and then we hiked Monowilly Falls, and we just did everything we just did all the stuff that's super fun to do, and I just treasure that like crazy. And Apple's always feeding me pictures of that week that I was with him. Do you know what I mean? It still happens all the time. And you don't know, like you don't know what you've got coming up ahead. There's certainly the long draw of time, and you'll certainly lose the kids at home over just the regular course. But sometimes not even that is promised. So find your balance, but don't be too heavy on either one or the other. Obviously, you can't be a delinquent dad and you like make no money and you don't support people well, and you've got a responsibility there, and there's a lot of things you want to fulfill and do. So like for sure make money, but when you're doing what you're doing, like do it well, crush it, and then but don't be a workaholic. You'll regret it.
How did that thanks for sharing, by the way. How did that moment change you personally and then professionally going forward?
Well,
it made an impact, of
personally,
course, right?
Yeah. Personally, just really opened my world to like a real humility, a super deep, like a lake of sadness opened up inside of me for several years, like that I can't describe. It was like a hole you could throw anything into, and it would just nothing surpassed kind of the effect of that or the importance of it. I could sacrifice anything. I could do anything. Like I was so stunned, and I don't know what to call that part of myself, like that was there for a few years. But it wasn't hard for me to like sacrifice something or do something or help someone or say something to someone, or kind of like all of my guards came down personally. So I could talk, I don't know, just things that were inhibitions maybe before, that you're like, we all have things like in a relationship, like, gosh, should I send that text to that guy? I know he's going through something right now, or should I reach out and hug this person or whatever? And like this thing that was in me was so big, like I had no inhibitions left, because it was just, I don't know, it was just so big. And so I did a lot of things. Like, it was kind of a blessed time in my life. I don't know how else to describe it, but like, I carried myself differently for a good while. And I just was really accepting of things. So I would say that's what it did for me personally. I think you could alternatively have just chosen to kind of run from that maybe. But for me, like, I immediately chose to just accept this road. Like, okay, whatever this is, like, I'm going to walk it. And I'm open. I'm just wide open. And I aspire to still be that way. Like, I wouldn't say that I've been able to retain that. Like, over the years, kind of just normal life has crept back in, which is a type of comfort in a kind of way, but it's kind of like I kind of don't like it at the same time. Like I really kind of respect almost who I was for a while there. Professionally, I had awesome partners. For a few months, they just kind of carried the business, and they were awesome. Like, you just thank goodness you have great people around you. And then I didn't find it hard to go back to work, and I didn't exactly. Some people kind of throw themselves into work as a way to kind of deal with their emotions, like make cope, like get away from it all. It wasn't so much that for me. It was just like I could work, and but I really was really conscious about trying not to run, and so I worked. Like Chet, my main partner at that time, he was always like, dude, if you need to take some more time, like do whatever, and I kind of just didn't need to. So I don't know that it changed my work. I don't know. You'd have to ask somebody else that worked around me, but like, we just had work to do, and I just went back to doing what we were doing.
Let me maybe add to that question. Did your decision-making change after that experience? Did your perspective of running business and navigating problems any different after the experience?
Like lightning at first, like none of that mattered to me at all for a little while. Like over time, you realize you still got to pay bills and you still got to do things and stuff. Thankfully, like I wasn't like on my last dollar ever through any of that. Like, we'd been pretty successful already. So I don't know. But
I just want to say this goes hand in hand with another example of Russ, that you go about, you lean into something even though it may be hard. You may look at a mountain and go, it may take a while to summit, but you just slow and steady. You leaned into a problem that people would have often leaned away from. You leaned into becoming a banker rather than being content and happy and staying as a broker. There are just many things in your life that I look up to with you not being afraid to take on hard things.
Yeah. I don't know for sure where that comes from. I was just talking to my siblings about this idea recently, about when you kind of just get into a place of comfort. And if I've been comfortable for too long, like I kind of get disgusted with it. I kind of get like bothered by the problems that exist, and we need to go solve those problems. And like, I feel like I'm an early adopter to wanting to go like, okay, let's go solve some of those problems. But I'm not content to kind of just lay around for too long. I don't like who I become, really. And then I immediately, so then I'm prone to go too far. It's like the guy that gets a gym membership and goes like, works out way too hard, and then is so sore he doesn't want to, like,
can't walk upstairs.
Yeah. Like, my kind of sturdy nature ends up just like, I take on this. Oh yeah, I'll do that too. And then this and this and this and this. And pretty soon I'm in a state of both physical and emotional exhaustion, and I've taken on too much. Like, I feel like I've spent the last 2 or 3 years unwinding all these, I bought all these rental properties, and then I bought these crumble cookie stores, and then we did this and started this and the other. And like, all of a sudden I'm like way too many open loops. And then I'm in a cycle right now of like closing off those loops. So I'm trying to find my happy middle between that and comfortable, lazy guy and that like you kind of went too far.
We'll check in with your wife in 2 years when you're ready to
yeah.
take out something else, right?
Smart.
Your 2-year cycle. Well, as we get closer to wrapping this episode, I know that you're a big book person. You do a lot of Audible. Give us your top 3 recommendations of books, and I'm looking more specifically for loan officers, real estate agents, 3 top books for those professions.
Yeah, so as a professional, like the first book I read that got handed to me by Charlotte Ellis, and she's the best, and she gave me High Trust Selling by Todd Duncan, and I read that. That was like a really great book to get an intro to how to have great relationships and be in the mortgage business. Trust and Inspire by Stephen M.R. Covey. Like his dad's book, 7 Habits, is like super foundation, like maybe top 5 for sure. But his son's book, Trust and Inspire, is like more newer, and it's amazing also, both of those. And then Atomic Habits by James Clear. That one appeals to me. The idea of kind of having a habit tracker, doing things day after day after day. You're like kind of laying this groundwork, and just getting things habitual. I've really reread that one multiple times.
Yeah. Some really good nuggets out of that one.
Yeah, to your point, we kind of covered this earlier, but when you had your awesome success in the broker world, you didn't have to bring other people in, right?
Yeah.
Like
You're right.
Someone making $8 an hour. I remember some of the guys that we were doing refis with. I was like, this guy was literally just came from the oil fields,
Yeah, I remember.
Or
Adam.
he was laying brick, or
Yeah.
But good people, like just good people, and you gave them this amazing opportunity. I was one of the kids that you basically kind of took under your wing,
Yeah.
This kid from Podunk, Sanpete County,
Yeah, he was into photography. He was ready to be an artist probably or something, but I sucked you into this mortgage business. I'm really sorry, Shaun.
No, and it's changed my whole life, and you didn't have to do that though. And like, what is it about you that, because I know you're a big proponent of single moms, right?
Yeah.
That's important to you. Like, where does that come from? Or
so when I was young, like I keep mentioning like those 2 books, Stephen Covey. My brother married Stephen Covey's daughter. So when I was like a teenager, I got kind of all of a sudden I started going to these. I got introduced to Stephen, and I got really inspired. Like at some point, maybe a lot of us find self-help. You find the self-help section of the bookstore, and you kind of go crazy for a little bit. Like I found that when I was like 14 with Stephen, and like loved it. Like just kind of settled in there. There's a story I heard at his funeral where he was talking to his brother, and his brother was like, "What do you want to do?" And Stephen said it in 3 words. He's like, "Unleash human potential." And like that message resonates with me so big. Maybe from those early years or whatever, but it's kind of the belief that like I am you, that we're bonded somehow, and I can't neglect the other people on this planet and succeed myself, like in a way that's hard to imagine maybe or something, but we're connected. And so I actually best help myself by helping you. And so the idea of like, let's ascend together has always just super appealed to me. And I get inspired about that. Like I can go deeper. I can work harder. I can again, get over that obstacle between reaching my hand out to somebody to help or to be open, make a vulnerability, do something, start a business, put your, take this risk. Why would you do all of this stuff? It's because of that feeling when I think about those kinds of concepts, I'm like so drawn to that and inspired by that it gives my life meaning. And I like that.
Whenever you summit a mountain, a hike, it's always funner to do it with someone with you.
Yeah.
Or a group with you, right?
Mm-hmm. I mean, I respect anybody who's successful, and if you're the king on the hill and you got all your gold and your castle's all built and everything's great, that's certainly a great time to start helping people. But I just respect people way more that find a way to give along the way. When Jesus talks about the widow throwing the widow's mite in, and it's all that she had, be it little as it was, like that's an inspiring story to me. And there's a gradient all the way up to you're really wealthy and you can give away lots of money, and that's great. But I just think pay along the way is like the way to do it. There's a danger to like, I'll do it later. I'll get to it later or whatever. And also there's just all those years, all that time you're going to pass. Like, I don't know. There's a way to pay along the way and help people out all the time.
Yeah. Well, Russ, I know that you have impacted a lot of people as a leader and owner of a mortgage company. You have touched a lot of lives, inspired a lot of lives, and being one of many, I just want to take a moment to say thank you.
Thank you. Yeah, it's a pleasure. Thank you for having me on.
All right.
Yeah, thanks for being on. Yeah.
Well, as we wrap here, if anyone listening wants to get a hold of you, how do they get a hold of you, Russ?
My phone number is 435-313-3055. Send me a text. My email is russ@patriothomemortgage.com.
If you're any real estate agents out there, loan officers listening to this podcast, you can get a hold of Russ with the references that he just listed. You can find Shaun and I on Instagram with the After 5 p.m. That's also linked to our own Instagram handles. Feel free to contact us there. And signing off.
Until next time.